So I came across a really interesting article on CNBC recently where the writer of the article kind of went over 4 stocks that they believe are tariff proof. So what we're going to do today is actually go through these 4 stocks and I kind of give my opinion on these picks, maybe give you some alternative picks that I find in the similar industry as the stock picks that they made, but the ones that I'm maybe personally holding. And I just thought this would be an interesting exercise to go through to see what the mindset is around people who understand investing and what stocks they're looking at during these tough times. Let's go. Hey guys, welcome back to a new video. My name is Nick. On this channel we focus on investing videos, stock market videos, personal finance videos. If you like that kind of content, make sure to subscribe down below and drop your like to show support on this channel as well. So getting right into it, let's look at the first pick right here. We have a company that's in the restaurant space, and it's a company that's called Darden Restaurants. So the logic used for this kind of stock is since wage growth has been accelerating, the consumer has had more money in general, so they are more likely to go out for dinner. I mean, this is a pretty valid reason. The more money people have, the more likely they are to go spend that money on a fancier dinner than during tougher times where they might not have that money to spend. So restaurants, especially ones that are focused on more of a premium dining experience as opposed to just fast food, do tend to do well when the economy is doing well. But realistically, the sit-down restaurant space is very competitive. If you go around your city, you look around the kind of restaurants that there are, the number of restaurants that they are, there's a lot of restaurants that are chains, a lot of restaurants that are owned by a single owner. And of course, to top it off, you also have a lot of fast food options which consumers are tempted to go for. So yes, when the economy is doing well, restaurant stocks do well, but that does not mean that every single restaurant stock out there will do well. This company though, Darden Restaurants, actually owns around 1,500 different locations of restaurants like Olive Garden, Longhorn Steakhouse, and a couple other well-known brands, so they have a pretty good presence here in the United States. And as we can see from this chart here, the comparison between the stock and the S&P 500, it has well performed the S&P 500 this year, up almost 13% versus the S&P's 1%. Now what I do find interesting as well is that this article does not mention any fast food stocks like McDonald's, for example. And if you've been following these fast food stocks, McDonald's specifically, like I said, you'll notice that this stock has been making all-time highs recently. So although I do agree that the restaurant space is a good space to invest in during a tariff war because things are pretty much local in that space, fast food stocks also continue doing well, especially ones that have a strong brand name behind them, and my pick in this space would be McDonald's. So as you can see here from this comparison chart, McDonald's didn't perform as well as Darden Restaurants this year, but it still well outperformed the S&P 500. So the second stock pick here from this writer is a company called Waste Management. Now right off the bat, I can say that this is a very strong pick. This is a very consistent company that is very stable and does most of its business in North America, with majority of it being in the US. What makes them really attractive is that they have a huge moat around them, and they have a massive customer base as well, which gives investor confidence that this company is not going anywhere anytime soon. So as the name implies, this company, Waste Management, is a company that deals with waste and garbage and that kind of stuff, and it has processes in place to kind of process that waste. Now the logic behind these kind of stocks is that, we all produce garbage, whether it's a recession, whether it's a trade war, whether it's a strong economy, it doesn't matter, people always produce garbage. And yes, that is true, and that is why this stock has been a consistent performer throughout the years. And I know personally, just from my Facebook group that we run, if you're interested in joining, the link in the description, completely free group, there are a lot of investors in there that do bring up Waste Management pretty often. It is a stock that they hold in that group. So it is a popular stock out there. So I do understand the reasoning behind it. I do understand kind of the confidence behind this company as well. And I do think that this company will continue to do well in moving into the future. Now comparing Waste Management to the S&P 500 year to date, you can see that it didn't perform as well as the restaurant stocks did, but it did come in with over 6% gain, which was again well ahead of the S&P 500. Now you couple the stock with a dividend and investors get extremely excited and they wait for opportunities for the stock to dip, and if you notice, any dip that the stock has gets bought up pretty quick. Now the third company that we have here in this list is a real estate company, and it's one called American Tower. So this may also be a good stock to look into to help diversify your portfolio if you don't have any exposure in the real estate space. Now I personally hold McDonald's, I have disclosed that previously, And McDonald's does have a lot of real estate out there in prime locations all around the world. So I can kind of see McDonald's as kind of a real estate play as well, even though it is primarily in the restaurant business. But if you're looking for a stock that's pure real estate and gives you good exposure to real estate, this may be a good one to look into. And if you aren't aware, this company is also a REIT. A REIT is a real estate investment trust. And what that means is essentially this company is obligated by law to pay out the majority of its earnings to its shareholders, and does that through dividends. So you also get a good dividend out of this company, as well as capital appreciation over time. So we can see here when comparing to the S&P 500 that for most of 2018, it was pretty on par with the S&P 500, but in the last month or so, it did take off substantially and is now giving investors a return of almost 15% gain for the year. So this is another strong performer, another double-digit performer for 2018. And although there is still another month left where things could change, it does seem that this stock is on the right track to providing investors with good gains for this year. So finally, coming in at our fourth pick from this article is one in the healthcare space. So now I know what you're thinking, most likely it's going to be Johnson & Johnson or Pfizer. Those are the two most popular stocks. Maybe even AbbVie, because that's kind of a stock that's been up and coming and a lot of investors have been talking about. But no, the pick that they chose in this article was UnitedHealth. And to be honest, this company flies under the radar of most investors. Most people don't know what this company is, what they do. I mean, you can make an assumption they're in the healthcare space, but beyond that, I don't really know what they do. And the funny thing is that these guys are a $270 billion company, and they've been providing incredible gains to their investors. So if you take a look at the chart here when comparing it to the S&P 500, it has returned 26% so far in 2018. Now this is absolutely incredible in my opinion, and being that 2018 was such a volatile year, being that UnitedHealth is already such a large company, to provide 26% gain in a single year to their investors is absolutely incredible, and is actually why the stock has been picking up a little bit of attention recently and has been getting put on people's radars and watch lists. So if you are interested in something in the healthcare space, you don't want to go with the typical Johnson & Johnson, Pfizer, etc., maybe take a look into UnitedHealth. You might be surprised with their fundamentals and their charts over the years. Now, I do want to cover that although these companies did well in 2018 so far, it does not mean that they will close out the year this strong, and it does not mean that it will continue in 2019. So there's really three outcomes that can come from this whole trade war, trade tension, right? The first is that things get worse, and in that case, these stocks that we talked about today may continue on their path, may even get stronger, and most of the other stocks out there will continue to either move sideways or maybe even get weaker. Now, the second outcome is that things pretty much stay the same, nothing really changes, and if that's the case, we might continue on the path that we're doing right now. Some stocks do well, some stocks don't. These stocks listed have done pretty well, maybe they'll continue to do well, maybe they'll sell off a little bit, but you can see that some of them had a pretty shaky 2018 up until recently, and that could be their performance again in 2019. And then of course the third option is if we do come to some sort of resolution or take steps closer to a resolution. And in that situation, I believe that these stocks might actually get hit a little bit, because a lot of these plays are considered more safer stocks, kind of, dividend growth investing or just dividend investing in general. Typically, you look at safer stocks when there's a lot of shaky stuff in the economy, and typically look for stocks that pay out a dividend as well. That's kind of what most of these stocks were that we covered today. And if there is some sort of resolution, I think that these tech stocks that have gotten hit a lot recently will start moving higher. These stocks may start selling off because money could start flowing out of those stocks into tech stocks again. And we could go back to kind of performance that we had in early 2018 or maybe even in 2017. But my point is, no matter what the outcome here, I think it's really important to position yourself no matter what. Like, there shouldn't be, you're biased towards one side or biased towards the other side, because if what your theory is doesn't play out, you could get burned pretty badly. So what I would say is I would look into diversifying your portfolio in all three of these scenarios, so you have some exposure no matter what scenario plays out, and you will benefit over the long term with that if you do stick to that strategy. So that's something to consider. That's something that I'm personally looking at, and that's just something that I think is pretty smart of an investor to do, especially when times are kind of shaky like it has been in most of 2018. So like I said, I've personally kind of changed my portfolio a lot recently. And going into 2019, I have a brand new strategy that I will be implementing and I will be disclosing in my VIP group. So if you're interested, make sure you join that as well. You'll see every single stock that I own right now, and you will see exactly when I buy or sell any more shares of any stock. But either way, guys, I really appreciate you watching. Hope you enjoyed this video. Drop a huge like down below and let me know what stocks you'd be interested in holding if this trade war continues in 2019. Thank you for watching. Hope you have an awesome day, and don't forget to invest positively. Peace.